Welcome to our deep dive into Tata Power's Q2 FY26 results and key market insights as of November 2025. In this video, we'll unpack the company's latest financial performance, explore analyst commentary, and break down the risks and challenges facing India's leading power utility. Tata Power is at a pivotal moment, balancing its legacy in conventional energy with a bold push into renewables and new technologies. As the energy landscape rapidly evolves, understanding Tata Power's strategy and results is crucial for investors, industry watchers, and anyone interested in India's clean energy transition. Let's begin with a quick overview of the company's business segments and market focus. Tata Power announced its Q2 FY26 results on November 11, 2025, highlighting its diverse business segments. The company operates across conventional generation, both thermal and hydro, alongside a rapidly growing renewables portfolio that includes solar, wind, and hybrid projects. Additionally, Tata Power is expanding its presence in distribution, electric vehicle charging infrastructure, and solar cell and module manufacturing. The company's current market focus is clear: accelerate the transition to clean energy and support India's infrastructure growth. This strategic diversification positions Tata Power to capture opportunities in both traditional and emerging energy markets. Let's look at the key financial metrics for Q2 FY26. Tata Power reported revenue of 16,352 crore, a slight 1% year-on-year decline, which was just below analyst expectations. The EBITDA margin came in at 21.2%, down from 23.9% last year, indicating some margin pressure. Net profit ranged between Rupee 919 and Rupee 1245 crore, depending on the source, reflecting a mixed performance, either flat or up 14%. Notably, renewables revenue soared by 89% to 3,613 crore, while thermal and hydro revenue dropped sharply by 46% to 2,336 crore. The stock traded around Rupee 390, down 0.4% on November 11, 2025. Despite some headwinds, Tata Power's Q2 results showcase several positives. The company's diversified portfolio, spanning thermal, renewables, distribution, and manufacturing, provides resilience. Renewables are booming, with clean energy EBITDA up 57% year-on-year, and 3.8 GWP of rooftop solar capacity installed. Tata Power's solar manufacturing edge is clear, having dispatched 809 MW of ALMM-listed module. Distribution is also expanding, with a target to reach 40 million consumers by 2030. Additionally, a major new hydro investment, an 11,000 crore project, aims to supply Mumbai, underlining Tata Power's commitment to infrastructure growth. However, Tata Power faces significant risks and challenges. The Mundra thermal plant shutdown led to a 46% drop in generation, highlighting the vulnerability of the thermal segment. Margin pressure is evident, with EBITDA margins slipping from 23.9% to 21.2%. Regulatory and tariff risks remain, as state policies can impact returns in the distribution business. Execution risk is also a concern, with a 10 GW renewables pipeline facing potential land, grid, and permit delays. The high capital expenditure for the new hydro project brings funding and timeline uncertainties. Finally, policy dependence and coal or imported fuel price volatility could further impact the thermal segment. Analysts have weighed in with a mix of optimism and caution. According to Fortune India, renewables are driving Tata Power's next growth cycle, while NDTV Profit points out that thermal weakness and margin compression remain near-term hurdles. Reuters highlights that regulatory delays and project execution risk could limit short-term upside. However, Business Today maintains a bullish long-term outlook, citing Tata Power's clean energy expansion and manufacturing strength. Overall, the consensus is that while challenges persist, the company's strategic shift toward renewables and manufacturing positions it well for future growth. Looking ahead, Tata Power's strategy is focused on shifting from thermal to renewables and manufacturing-led growth. The company has set an ambitious clean energy target, adding over 10 GW of capacity by 2030. Electric vehicle and rooftop solar segments are poised for rapid expansion, tapping into India's growing demand for sustainable solutions. Tata Power is also diversifying its distribution network to reach more urban consumers and is committed to the Make in India initiative for solar modules and batteries. This strategic direction aims to secure long-term growth and leadership in the clean energy space. Sum up, Tata Power's Q2 FY26 results reflect both strengths and challenges. The company's clean energy growth and diversified business model are clear strengths, while thermal drag and margin pressure remain weaknesses. Opportunities abound in manufacturing, EV charging, and distribution expansion, but threats like regulatory changes, project delays, and fuel cost inflation persist. Analysts maintain a cautious near-term view but express strong confidence in Tata Power's long-term prospects, especially as it accelerates its clean energy transition and manufacturing capabilities. Our analysis is based on reports from NDTV Profit, Fortune India, Business Today, Livemint, ZBiz, Reuters, and Times of India, all dated November 2025. In closing, Tata Power is transitioning from a traditional utility to a future-ready clean energy leader. The company's journey reflects the broader transformation underway in India's power sector. As Tata Power navigates challenges and seizes new opportunities, its progress will be closely watched by investors, policymakers, and the public. Thank you for joining us for this comprehensive update on Tata Power's Q2 FY26 results and strategic outlook.